Hey, Nick Inman from VolumeProfileTrader.com on Saturday, September 15th, and in this video we're going to go through the S&P, NASDAQ, Dow, the Euro Dollar, and some more futures, and then our positions and what we're planning to do with them as far as managing risk, managing the position. So first things first, S&P markets in general continue their rise after the Fed came out on Thursday and said that they were going to continue to be active in the markets, basically propping them up. The market liked that and rallied off of it. Now, there's that potential that this could be, a top, but at the same time, I doubt it is, just because the Fed says that they're going to be a backstop for the market. So let's keep our bullish stance, but let's be objective about this. Let's look at volume and make sure that it's on our side. So, right now, a retest of 434 and, one second, a retest of 1435, excuse me, there'd be nothing wrong with that. So just be aware of that. The market could retrace and then maybe go higher to push towards 1500. But as long as these monthly profiles, these point of controls continue to rise, that's all you need to be worried about. So if the month, as long as we hold 1435 as support, I think you're good. So let's go on. NASDAQ, making new highs. Now this one, the support's a little bit higher, 28.22 or so. That's your point of control for the month. Just keep an eye on it. You kind of want, the market to stay above those levels. It's definitely above the 2770 level, which was last month's point of control. Even a test down to those levels, I would still say it's okay for the NASDAQ. I want to remain bullish, so as long as this continues to work, I'm going to ride it. You just have to be cautious that, everyone's all of a sudden got really bullish, maybe a little more push, and then you look to take some profits, scale down, move into cash, wait for a better opportunity, and there will always be opportunity. And the Dow, same thing. I guess we'll show that just to be fair. It kind of looks like the S&P. You have a high volume area down from 13,1250 to 13,350. That's kind of your bogey. And anything above, you want to trail your stops, but you still look to be a buyer on pullbacks. All right, Euro. This is absolutely exploded. However, and in this, it's a little risky just because of the strength of this rally, but I did take a speculative short position on the Euro against, the thesis is against this point of control after the run it's had, and especially the last 4 or 5 days, basically the last week. We'll see a retracement off these levels, and even if it pulls back $1, that's going to be a profitable trade just from, we caught it basically from the exact top. What we did was bought 131 FXE puts for $1.82 each. I think it was $1.82. Yeah, $1.82 each. They're slightly in the money, no big deal. But what you want to see, at least this is what I want to see, is just a pullback back to the gap from Thursday to Friday, and that's enough. And I'll take profits there because I don't want to stay in front of a train, but I'll fade it for the meantime. Gold, I think this is another name really in general. You just want to be a little protective. We're at a high volume area here. Now it's blasted through every other high volume area, but eventually we should see some type of pullback, even if it's just, to the prior balance range. But what you've seen is, basically a trading box, a breakout, a range develop, and then it just trickled above that range, no retest, and then we developed another range. So eventually it's going to give us a retest. I was thinking value area low, and it did not retest. I'm not even going to act like it did. But maybe at this high volume area here we get a retest. The point is you definitely want to stay long. Gold, it's working. We caught this literally the day before it broke out on the 20th of September. if you don't believe me, go to my Twitter feed. It's there. Recommended buying GLD at 157.11, and now it's at 171.80. 157.11 on the 20th here, and that ended up working out like a monster. Alright, silver, same thing. This looks like it wants to go higher, but just be careful. I have scaled down of my silver position into strength. I still own, it's about 5% of my portfolio. Actually, it is. But it was about 10 to 12 a couple of weeks ago, so I scaled down some, and just gonna let it ride now, see what it does. Alright, oil right at the point of control for the year, and you're seeing a little bit of selling, and this is kind of why I'm saying just be careful for a potential pullback. So many bulls, the professionals are probably willing to sell some into this trade, to take some profits, and try to reload, try to shake out weak hands and then reload at lower levels. So, something like oil, it's coming off a little bit. Kind of looks like the euro, just rejection against the 1-year point of control. Let's see. And copper. We haven't talked about this, but another example of how accurate these levels can be. Point of control for the year. Notice how resistance, breakout, support, big breakout. Look at the nice volume here. That's what you want to be a part of, off of these big levels. And where's your target? The next high volume area, which is basically current price. So you look for potential selling. Just to show you, Freeport-McMoRan, high volume area. Now all of a sudden, you're getting resistance. This is a retracement. This should be an easy trade to really 41 or so. It's just kind of what it looks like. This kind of bar is an easy bar to take profits in on a Friday. A big gap up higher. That's where professionals are taking profits. So just be aware of that. All right, Apple. Now, my understanding is they did a pre-order for the iPhone 5, and there was such high demand it sold out in an hour, I believe, and the Apple Store went down. So I doubt $691.28 where it closed is fair value. I'm sure Apple pushes in the 700s throughout the rest of the year. It's just that kind of stock, and it just keeps going. I have a minuscule position in this. Wish I had more, but I don't. That's the way it goes sometimes, but I'm going to ride what I do have. Alright, American Express. 60 by 60 half, 62 half, October call spreads off this point of control for the year. You want to see this go higher. Good buying volume the last 2 days. If we look at Visa, that bounced off the 55 very nicely, and MasterCard went off the 1-year point of control nicely. So here we are on American Express. That's what we're kind of looking for. 62 half is our upside call, the one we sold. So we can make 3 to 1 on our money, so not too bad. Let's see if we can ride it up. ConocoPhillips, I remain long this. I'm not selling this for a long time. So we'll see where it goes. However, I do want to kind of zoom out to see what it's looking like. Oh, a big nice triangle pattern right off the point of control for the 2-year. Yeah, this is something that you want to be long. So, on weakness, of course. Don't just buy it up, off of support, which was at 55, and now it's trading at 58. This is a pretty slow mover. So, be patient, wait for your entry. If you're looking for an entry, a pullback towards 57.5, 57, that's where you want to be a buyer, on the anticipation that you get a pullback and then a bounce off of this month's or last month's point of control. That's what I would be looking for as far as a potential entry. Alright, DuPont long 52 half this January 13 calls. January 2013 is when they expire. So I can let this run, and this could be a big one. And it's off the This is a 3-year point of control. It's bouncing off a good volume here. This could easily push towards 55. 52-week highs would be 57.5, it looks like. So 55.5 to 57.5. The calls are already up 36% from where I bought. So this could be a monster, and this could be one of those trades where it's a triple, but it's a triple off of just long calls, not necessarily long call spreads, which is a little bit different. So this could be a big dollar winner. Alright, already showed you gold, long that. Coke, weekly chart, consolidation down here. Daily chart, we're seeing, let me show you the volume profile. A little bit of resistance here. There's no doubt about it. We're coming into this high volume area, and you're seeing selling pressure. What happens? We break down, we break support. It basically gives you a 50% retrace here, continues lower, value area high for the year, dips down a little into the high volume area right here, however you want to slice it. That's support, that's good support. Now we have a higher low here. We'll see if this remains resistance, but if we get above here, say a close above, we'll go the 55 SMA, 38.85. That's positive, and you want to see this go higher. But I do own some Coke at right around current levels, and I'm short some 38.75 calls expiring next week, this coming week. So we'll see where that takes us. But if I get called away, that's fine, and if I don't, that's fine too. I collected some premium. Plus, we bought calls back at the beginning or at the end of September on Coke. We flipped them. 9.6 is when we sold for almost a double on those calls. So I just wanted to point that out. Alright, what else? Silver, you already know I own that. Wells Fargo. 35 by 37 October calls off the point of control for the year. So we're seeing a nice breakout off of this level, and we're just kind of looking for a decent trade, and we're almost there. I'm going to let this ride maybe a couple more weeks, especially if it remains strong. I'm pretty confident that it will, or at least balance. I'm pretty confident this trade will realize its full potential. If you want to see an example, look at Home Depot. Same situation. We're basically on this phase in Wells Fargo. So we'll see if, this is kind of what we want. If we get to the point where this call spread, goes from, let's see, we bought it for 57 cents if I recall. Yeah, 57. And now it's trading almost a double, a little shy of a double. But if this climbs towards 37 and then just starts trading sideways, what will happen is that 37 call, the time value will start diminishing rather quickly, and that 35 call will be completely in the money. So, you're looking at a situation where this could realize its full potential, which is $1.40 or so of potential upside. So we're about 3/4 there, or I'm sorry, 1/3 there to full profit. So we can still let this ride and see where it takes us. Yum, the only weak name in my portfolio. I guess you can consider Coke pretty weak too. But this, it's profitable. The call spread's working out. 67.5 by 70. Here we go. 67.5 by 70 call spread. And, it's not in the money. Resistance is 67.5, basically my long calls. But the position's slightly in the green. Looks like about 20% gains. Not that great, but we have till October. So what we want to see is some type of higher low. Preferably if these tails hold. If they don't, I'll probably get clipped at a break even because that's where my stop is. But I want to see this thing go up towards 70. So overall, setting ourselves up, because these were open trades, for a nice run, a nice potential month in September. And if we see the market appreciate a little more, for example, if the S&P pushes up towards 1500, which it's not far from, even like 1480, we'll be in a position to take profits on these spreads, these options, etc., and kind of look to reload at lower prices. And if we don't get that opportunity, we're going to stay focused in the hourly time frame and look for opportunities there. So we'll just have to wait and see. Did I cover the dollar? Sorry, getting distracted. But we'll have to wait and see and kind of go from there. So one thing, the dollar just completely rolled over off of these highs. We're at the bottom of this high volume area, so I would expect a bounce. However, this is on, I wouldn't be buying this. I would be, I would rather, let's put it this way, I would rather short the euro against the point of control for the year than try and buy the dollar, breaking its point of control from the year, touching the bottom of this high volume area. That's just, my preference. Oversold bounce, sure, but like the euro, we're stepping in front of a train here, just looking for a, for a retracement against a defined level. That's all we're going for. And if it works, it works. It's really a hedge against our long portfolio, just in case the market does pull back, for example, early next week. So anyways, I hope this helps. Hope it continues to help. And if you have any recommendations, let me know. Other than that, I will talk to you later.